Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants.
This podcast is for entertainment purposes only and should not be relied upon as the basis for investment decisions. Podcast guests and their clients may maintain positions in the securities discussed in this podcast.
All right, we're live. Thanks for joining me, gents. Got a few things to kick through today. I'll go one brief bit of good news. You guys can jump in if you found anything else. Was a groundbreaking Israeli cancer treatment has 90% success rate. So a new cancer treatment for multiple myeloma is bringing 90% success rate, bringing people into remission. Yeah, some good news. You guys,
what's the basis of the technology? Is it a new approach?
Based on genetic engineering. So they've used, I'm just reading through this press release now, basically. Using the patient's own immune system to destroy the cancer. So it's CAR T. I don't know if you've ever heard of that genetic engineering technology before.
Man, that's promising stuff.
Yeah, those are the super promising ones. Kind of like the vaccines. That's basically what similar to what the vaccine mRNA vaccine approach to cancer treatments is getting your own immune system to fight the cancer.
It's so diabolical. So the most complex thing that we know about in the universe is the human brain. The second most complex thing is the human immune systems in general for higher organisms. It's that complicated. Like it's way up there.
Yeah, no, I agree. It's pretty impressive stuff. And if you guys didn't have anything else, I think the other bit of good news, which kind of foreshadowed a bit on the pod, was Apple's launch of the Vision Pro, which is their new mixed reality headset. I don't know if did you guys tune into any of the details of what was going on with this?
I didn't. No, this one crept up on me a bit. Tell us about it.
Yeah, so it's just been announced. It's quite expensive, so you'll probably see some headlines. It's $3,500 USD. It's mixed reality, and the idea is, okay, so there's a lot of things that's like radically improved on other virtual reality technology that's out there. It's designed to be worn so that people can see your eyes while you're using it, and it's more like a layer on top of existing reality than a current VR product, which is like you're completely in your own world. The idea is that you can still interface with the real world around you, but also have all this like augmented reality layered on.
Man, it looks slick. I'm just looking at a picture of it now.
Yeah, it looks pretty cool.
Yeah.
It's very big though. So like the idea, like would we walk in this wearing this down the street? I think they need to bribe a lot of celebrities to wear it on commercials before that becomes cool. So it's quite big, and it actually replaces, so a lot of augmented reality, the idea you've seen with like Snap's glasses, which is just this trial, Snapchat has this, they're kind of one of the leaders of augmented reality up till today. It's like they take the world as like you look through normal transparent glasses and they layer on something fake, something artificial in between you and that world you're seeing. And Apple's taken a different approach where they're completely recreating the world and then projecting it onto a screen that you look at. So you're not actually looking out into the world, you're looking at a representation of it. And that makes it a lot more, basically listening to Palmer Luckey, who's a guy who founded Oculus before he sold it to Facebook. He says that that's basically the future. Once you do that, you have a lot more control over what pixels you're kind of throwing through to your eyes. And so, okay, the some of the ideas of this is like you wouldn't need to buy a TV. You could have basically this huge like 8K display as big as you want, home cinema. There's like immersive videos.
Not only that, sorry, because I'm watching the promo clip now as you speak. It's not only the huge screen, but it places you in a beautiful natural environment as well.
Yeah, it does. It can cool. Completely replace, because it's filtering all the pixels around you. It can instantly change to be like a VR experience where it replaces everything around you, or it can show you what is actually happening around you.
Do you think in the end, Matt, when we're old and you'll be putting on your VR headset and plugging into your Live Forever machine, and you'll be saying goodbye, and I'll be old and I'll be like, goodbye, Matt, and we'll have a hug, thank you for a lifetime of friendship. And then I'll go and sit under a tree and die, and you'll just plug into the VR and just lie there in status for another 80, 90 years.
Do I think that's what'll happen? No, I think I'll be skydiving. I'll be living in augmented reality, man. I won't be
but your actual body will be lying there in a pod of gel or something, and you'll have a head on, and I'll be like, Matt found his peace living forever. And you'll be like, and I'll die under a tree, and you'll be like, Claude found his peace dying under a tree.
I don't know. I was going to say I don't like that vision because you're dying under a tree. But I think
okay with it.
Okay, so what you're actually getting at there, I think, does describe a difference to what I think a lot of people think of the metaverse, which is you go into this thing and your body just sits there and you're roaming around this and that's kind of the metaverse idea, right? Is like that's the full VR idea. And I don't really like that vision as much as I like the augmented reality concept, which I think is what Apple is also aligned with, which is you don't just sit there passively in your own little world. You actually engage with the real physical world around us, and then there's the stuff layered on top. And so that would be the difference that I think they're trying to get at with this Vision Pro, is that, and they made a big deal of the fact that you can still see the person's eyes who's using it. You can still see their face and reactions, and you can kind of see when they're like more in it or not based on like the eyes that you see, whether they're like covered up with other pixels and stuff. Yeah. So that's what I'd say about that. And I guess so there's this big one. We knew this was coming. They're also working on like a spectacles type product, but that could be years away because that's way, way harder. What was
like
impressive
a Google
for me,
Glass.
Exactly. Like thing. Google Glass, but cool.
And works.
But cool and works. And is now, it's almost like 10 years since Google, it's like a long time since Google Glass came out.
Yeah.
The application I'm waiting for, which will even get like a Philistine like me interested, is when I can have something where I don't care about I want the screen up there, you know, how it is in the air, but I also want the keyboard right there. And I want to be able to move the keyboard exactly where I want. So I could potentially,
that's such an old person thing to say, a keyboard. Like, what's a keyboard? You don't need a keyboard.
No, I want to just be able to put my hands in the air and like have them in front of me, not rested on the table. And so just I could naturally change the height. And if there was even some way that like wherever you put your hands, the keyboard would just go to underneath that. So you'd really just be like doing your fingers like you're playing, you know, a piano, and you could even be like that. Or
yeah, they actually have that, Claude. So I haven't seen whether it follows your hands, but I don't think that'd be the hard part. But yeah, there's a virtual keyboard that it will appear there. Can also plug it to use it with an actual one. But yeah, exactly what you're saying. And that was actually one of the big breakthroughs. So some of the stuff that hasn't been done before really well is it just reads your finger gestures. So you swipe just by, well, you guys can't see me, but just tapping your hand one, you know, direction to the left or right, wherever your hand is. Like it's because it's filming, it's taking camera of a visual of the whole environment, right? So it's tracking you all the time.
A bit scary from a data privacy standpoint. As a quick aside,
this is it. This is what we've been saying. Like this is why Apple's been so big on privacy. This is part of its long game. Is basically cementing this idea Apple is privacy because it's about to film everything in your life, all the time, including you. And here's it. Okay, so this is something that came out on Twitter. One of the guys who'd worked on this for, he says, 10% of his life, so a long time. And he talked about some of the he's like, some of this is now out in public patent, so I can talk about it. One of the things that it's doing is monitoring your retinas to determine before you click on something, your retina dilates in expectation of the response that your click is going to do. And they can use that to determine that you're about to click on something. So it's almost like precognition, right? It's like AI reading your thoughts effectively through your
it's not just like, that's a cool application, right? But when I'm scrolling through different things and an ad comes up, it'll be able to get my very real response to that.
Yeah, exactly. It can tell that your eyes are dilating, right? Which is something that you're interested in, which is
he likes ladies' shoes. Let's show him more pictures of ladies' shoes.
Literally, yeah, it's literally able to do that. And I think that the data privacy question is how much does Apple share that? Because obviously, if it came out that they were sharing that with advertisers, it'd be this huge uproar.
There really needs to be a way to just do the internet without advertising. Advertising is so hectically intrusive in our lives.
Yeah, I mean there is. I guess it's paid, right?
We need some kind of way to like stream value at virtually no.
I'm not saying
cost.
don't have advertising. Claude. I mean there needs to always be a way to pay to not get the ads.
I don't look at much ads online anymore. I've got like ad block and I pay for YouTube Premium mostly so that my kids don't get blasted with ads when they watch YouTube.
Yeah, so I have ad block as well, but that free tool saves me more ads than any subscription I can buy.
Oh yeah, it's huge.
And then half the things you have a subscription and you still see ads.
No, I will take this offline, Claude. There's a very
you want us to micro-pay with Bitcoin for everything instead?
Well, I mean, you need an economic model, right? So we landed on advertising because it's really the only one that sort of works at the moment. But if I can do microtransactions, if I can stream value in real time for virtually no cost, it opens up different revenue models. It changes the game. It gets rid of spam. It does all kinds of things.
Apple is better than anyone in terms of trying to create those kind of environments. So like Apple News is a good example of what they're trying to do there.
Nice work steering me away there, Claude, by the way. Can we actually get to Apple? Because I think the interesting thing here is that this is the first I think the watch came out, I want to say 7-8 years ago.
Mm-hmm.
So this is like the first new thing that they've done for a while.
For a long time, yeah.
And they've obviously put a huge amount of work into it. And we made a comment in a previous pod, they don't release until they're ready. So far, right? So that's I'm really, really keen to see how this thing. The other comment I made to you guys off air was it's obviously all about ecosystems that are built around it. And the other final point I'll throw out there, and you guys can just riff on it, is you made the point, Matt, that a lot of people see this as expensive. I think $3,500 for a brand new Apple product is actually not that expensive at all. When people are paying basically half that for a phone, right?
Yeah.
And this is ostensibly a phone as well, if you want it to be, and more. I think they've absolutely priced that really well. I'd be really interested to see how it goes.
Yeah, it's an interesting point. So there were some people commenting on that. They are kind of some Mac fans, but they're talking that if you look at the Apple One, which came out in the 70s, if you put that in today's dollars, it would cost $7,500. The Apple II, the first truly personal computer in 1977, would cost the equivalent of $14,000 with 48 kilobytes of RAM. By the way.
Wow. Yeah.
Wild. But yeah, so they're making the point, if you think of this as like a new computing paradigm, it's actually not that expensive.
It's cheap.
Yeah. It's probably too expensive for me to get one to just play around with. Okay, so here's the other take. The last thing I'd say on it is just, we'll look back on this demo in 10 years as like laughable how much the demo didn't use what it's capable of. So we're watching this demo and it's mostly screens floating around. The point of like immersive AR is you don't even interact via a screen. Like a screen is a construct you have to use when that's the only interface that you can create, right? Once you're in AR, there's no reason that you need to have it's very like skeuomorphic. You know how we build things that are similar to what we already have been using before? There's no reason we should have screen where there could be, a full reality interface, basically.
Do you remember the internet ads from okay, I'm going to age myself here. you youngins will have like YouTube and whatever.
Mate, we're millennials. We remember the internet. We're like the internet generation. We're as hardcore internet as it comes.
Well, I remember the ads, and people listening should definitely Google this, where it's sort of like, little Timmy can look up surf reports and Jessica can get help with it. It was like, of all the things that, yes, we can do that on the internet, but of all the examples they came up with was very skeuomorphic to your point, Matt. It was just sort of like, we imagine it as something like TV, but a bit better and a bit like radio and a bit like a newspaper. It's just digital. And that was like the best we could come up with. We're just so comically naive in retrospect. So I 100% agree with you.
Well, the funny thing on that point is we're looking at each other through, podcasting software that's recording us on speakers via computer, and the little leave button is like an old school telephone.
Yes.
Like as if you're going to hang up and put down like an old school telephone that has a round thing that you're dialing. It's like, whoop, goes on top. Like,
that's a Seinfeld bit, isn't it? Like it's hard to get angry on the phone with someone when you can't slam down a receiver. Go, boop, press the button instead.
Yeah, so I think that it's going to be pretty wild. I'd recommend the book Rainbow's End if anyone wants to dive into some sci-fi of what augmented reality can be like. That's kind of a fun one.
There's that movie we saw together as well, didn't we? Ready Player One, was it? Or something like that?
Yeah, Ready Player One, that's probably more like the VR version because you go into that world, you're like sitting in the gel.
True. That's not
that's
AR.
Probably, but yeah, there's a lot of similarities there. I think it's going to be pretty wild.
The AR, I reckon it's just like a gateway technology to the VR thing. And I think that the end game is the
you think the VR, the end game is the gel, the vats of gel.
It's either die under a tree or a vat of gel, Matt. They're your choices.
Two options. All right.
I think what's important about with Apple too is that, there's been the Oculus, there's been other sort of products out there, but the brand strength that they have, the platform strength that they have, my hope is that it'll be more enticing to would-be developers and content creators to create and build on this platform, because as we've remarked before, the hardware is useless without the software. The chicken and the egg problem. There's a few basic desktop things and I can watch a movie, and there's not, besides, like, you want to say Fruit Ninja, it's not Fruit Ninja, the VR game.
Angry Birds? Oh, you're talking about, which one?
Beat Saber. Beat Saber.
Yeah,
that's crazy cool game, by the way. But I mean, it needs.
Kind of
that's
it needs
what
more.
I really want
to watch. It definitely
watch.
needs more. I don't think there's enough there for most people to be using this at all.
I have a question for you guys. If this is yet another technology coup for Apple, does it mean I already own shares in Alphabet and I already own shares in Microsoft?
Look, I don't hold a position just because I'm not active stock picking in offshore markets. I do own Apple shares through ETFs and that kind of stuff. So it helps me with the sleep at night. But my high level thought on it would be, if you had to pick a winner over the next 10 years, I mean, you've already named two of the very likely candidates, and it feels like an omission not to be there. We know how, we were talking not long on the pod about how Bing may be threatening Google to some extent, right? So things can rapidly change, but I think you want to look at it through a probability lens that if you're going to take a basket approach on tech, like how do you not have Apple in there, right?
Yeah, it's like 30 times earnings for, Apple at the moment, which is historically high, but at the same time, like you could argue that the paradigm, the generational thing we're living through is actually these strong tech companies just keep getting stronger. Like look at Microsoft. That was a titan when I was a child. The first computer I owned was Microsoft. The first time I even went on the internet was Windows 95 or even an older one from that maybe. But yeah, certainly the first one I had in my house was Microsoft. And now here we are today, and it's still at the forefront with ChatGPT and stuff, which is fascinating enough that I subscribe to it for no actual practical reason other than to be like, wow, this is actually interesting enough to want to just play with and learn about.
Yeah. I mean, with a caveat, nothing we say is advice. I'd also, I've been very, very bullish on augmented reality, that it will be something, assuming that Moore's law continues. So we have to keep having enough progress to get this stuff small enough that everyone wants to wear it all the time. Assuming that happens, who wins from that? And it's really hard to think that Apple's not in the best position for it, because it's got such a rich ecosystem. It's got the privacy covered. It's got everyone holding phones already that you can send off computation to. It's got the AirPods, frankly. Like it's got so much of the rest of the ecosystem there. Yeah, there's so much I think that they're playing a long game on to win this.
Do you know what else they have, Matt? And this is the thing that Apple really nailed. Like there's tech and there's cool things that tech can do, but Apple made tech fashionable. I don't think you can underscore that enough. Like the phone is
too.
Yeah, but if you just bought that, what's it again? LVMH, that famous fashion company. If we just bought that with the insight, the random insight 20 years ago, you could have had, as these products become more expensive, they become more desirable.
That's called a Veblen good. I found out the name for the other day.
If you're just knew nothing about stocks and these Veblen goods sound like a great bet in a world that is increasingly unequal. Like that one insight would have got you on a massive winner, and perhaps still holds true to this day.
Yeah, no, I agree. And I think that your point, Andrew, the fashion point is critically important, because Google didn't get the fashion point when it launched Glass, did it way too early. Yeah. That is what you need to have to make people, because this is way too big for people to want to wear it around all the time. But the normal glasses, if they do develop that to get everyone to wear, they need to get the fashion part right. They need to make it really, really cool to wear glasses, which for us glasses wearers maybe is exciting. I don't know.
Andrew is dying to make the point, dear listeners, that Bitcoin is a Veblen good. Supposedly.
I texted that to you quietly so we wouldn't have to talk about it.
Hey Andrew, here's a chance for you to talk Bitcoin, because there's something in the news. Binance, which is a big exchange, is being sued by the SEC, I believe.
Yeah.
And maybe just give us any quick takes on that. Or it seemed to be some smoking gun where there was them talking to each other, swearing like we are an effing unregulated securities exchange or some comment.
Yeah, it was a long time coming. I mean, this people in the know have been calling this for well over a year. I mean, it's basically a crypto casino, and it's offshore from the US. They just skirted around a bunch of laws. It's like so many new things. They just run so far ahead of the regulation. Regulators were asleep at the wheel. They grifted and scammed their way, and CZ's going to jail. I reckon he's the next Sam Bankman-Fried. And good luck. See you later. Stop hurting people.
It's wild how fast it can stop, because in Australia, of course, you couldn't withdraw anymore, right? After banks kind of cut off the on ramps, and it might be a similar case here.
Yeah. Well, they didn't. Yeah, they did for them, just them, and very good reason. I mean, the whole. I mean, irony of ironies really is that here's something that you can self-custody, but can you please custody it for me, Mr. Offshore Unregulated?
To the dodgiest guy ever.
People what is with people? I don't know.
Cool. All right. We've talked about a lot of big stuff now. I think time to get into some smaller caps. Maybe a transition there. Should we talk about EBOS?
Just one last point on Binance. All of these crypto things that had staking and you'd get 20% yield and stuff, that is so red flag.
That's not a red flag. Yeah.
It's the idea I can
Risk-free.
earn 20% interest on staking. It's dude, that is the classic sign that this is a scam. Absolutely.
It's always set at a level that's not too high, right? If they are promised 100, you'd be like, no, that's not possible.
But some of the numbers I saw, 20, come on, believable might be 8%. 20%. Like,
I really hate the scam stuff. I don't know. I just feel for people that get drawn in by it, because I think that is just such a trap, especially if it's like, there's some even that were like 8%, and it tricks people's brain because they think, oh, I want to do something safe. I don't want to take risks with my money. I'll do this thing that I make 8%. And it's just like, no, I feel for those people. I know that there's a lot of like people that laugh at them, buyer beware, but there's a lot of innocent people caught up with it.
I'm not laughing at them. I'm like laughing at like just how obvious it was, like the whole thing. And it's sort of sad that, it took this long for that to become well known, I guess.
It goes outside of crypto too. I think all investors, we always need to ask, where does the yield come from? Like, fundamentally understand where these cash flows are coming from. If you can't answer that question, you've got no business investing in an emu farm or crypto or stocks or anything, right? Like,
that's a great point.
All right. Is this a good segue into the stock of the day that we want to discuss?
Yeah, lay it out for us. I don't know it well. EBOS. Tell us
EBOS Group. So we talked about it not so long ago, which is kind of unfortunate. I said, which was fortunate for me, I was planning to sell my shares, which I did. So I do not hold EBOS shares. However, I like the company, but today it has big news because basically it had a $1.9 billion or has a $1.9 billion a year revenue contract with Chemist Warehouse to supply them with pharmaceuticals.
Okay, so they're a pharmaceutical wholesaler.
Yeah, so these guys are actually a pretty good company, and they've had an atrocious little impact of their share price today in the last few days. But, still then I think that, they're pretty much
massively over 5 years.
Yeah, and they're almost the same share price as they were a year ago, basically, as well. Like, it's in the greater scheme of things, they're still a good stock. But one of the things that really grew, like, look, I mean, I bought shares in 2020 because I thought they were such a safe company to buy. Like, this was like in the sort of initial stages of the pandemic. They were like kind of an obvious beneficiary as well. And it just so happened some private equity seller was creating volume at that point. So one of the things that it was benefiting from at that point was the fact that it had in 2018, I think, or 2019, won the Chemist Warehouse contract. So, it's a distributor. It distributes to its own pharmacies, the Terry White brand or Terry White ChemMart, which I'm sure everybody knows. And it also distributed to Chemist Warehouse. So it had, all that volume going across its network. Distribution network has a lot of fixed assets. So having that extra volume go through is good. I listened to the conference call today. One of the analysts on there put it to the management that the Chemist Warehouse contract had been on lower margins because like me, he had assumed that Chemist Warehouse had bargained a lower margin. But the management refuted that, and they were like, oh, I wouldn't necessarily assume it was on lower margins. And previously to EBOS winning it, Sigma had it, and they had well-publicized sort of failings. Like, they sort of let Chemist Warehouse down a bit, I think. So EBOS got this win that was like sort of free upside for it. And then today the terrible news has come for EBOS, and it is that Sigma has won back the contract. So, and as a result, at the time of we're recording this on Tuesday, the 6th of June, the Sigma share price is up 20% to, 76%, 76 cents, beg your pardon. And the EBOS price is down 10% to about $34 now, on the Australian exchange.
And it had gone down a bit before the last few days. I don't know if people had figured this out.
Yeah, it looks very much like that might have leaked somehow, because if we go back even just to 2 weeks ago or 3 weeks ago, it was above 40 and, 33 today. So it does look a bit like maybe that some people kind of knew about this somehow, which is disappointing.
I was just going to make a comment. Is it a Kiwi company?
It is, yeah.
Out, pass. Don't trust them.
Yeah, I guess it's just it's a sign even big, I think we were talking about this as one of the most reliable kind of blue cap winners when we last saw it. So I think it's just a reminder that even if you're investing in equities, these can happen, right? You can lose a contract and have a bad day like this. Unless you had a view that it was a big permanent shift in their competitive position, that would probably be the only thing that might prompt me to reassess it if I owned it.
Well, so the thing that I think was interesting was that in order to get this contract off EBOS, Sigma had to agree to a number of sort of unusual contract terms, such as a right for the Chemist Warehouse to acquire certain non-core assets from Sigma, which assets have a value of $24.5 million. Or if Chemist Warehouse chooses not to acquire those assets, then Sigma will pay $24.5 million to Chemist Warehouse. So, on the face of it, Chemist Warehouse gets the choice of a bunch of random assets or $24.5 million. And on top of that, they get 10.7% of Sigma's issued share capital.
That's interesting.
So just giving 10% of the company away. So this is displaying why the Chemist Warehouse deal with EBOS. I think, somebody Mondi, actually, thanks, mate. Someone on Twitter was like, oh, you mentioned this as a risk. And it was always a risk because it's like Chemist Warehouse is this big, powerful customer that knows how to throw its weight around. And even in going to Sigma, like it's getting 10% of the company itself. Now, maybe Sigma's an interesting bet. Maybe it's not.
That's impressive negotiating.
Yeah,
That's
exactly.
Incredible. That's wild, man. And how long is the contract for, Claude? Did it say?
I think...
like, imagine you swap back and get 10% of another company in like 3 years' time.
Yeah, exactly.
That's a
while you're looking at that,
position.
it's also, maybe I'm looking at that through rose-colored glasses, but it's better to have some, like, was it because Chemist Warehouse just couldn't work with EBOS? It was a bad product. I had all these troubles, or was it just like, no, we're getting a really good deal?
I highly doubt that it was like, oh, you guys are dropping the ball. It was like, these guys are desperate. Like, they'll do anything.
If you're going to lose a contract, right, that's the way to lose out.
And the thing is, it's a 5-year contract, Matt, to your question. Mm-hmm. So yes, like I would not be surprised. The reason, like at first when I saw this, I was like, to my friend, I was like, oh, is Sigma a buy? Do you just buy Sigma on this news? And it's not the dumbest idea, right? Because it's like, can company changing? Of course, Sigma now has debt. It's had to give away 10% of its company, blah, blah, blah. It's not exactly the cleanest win you've ever seen, but should be good for the business. But the thing is, I wonder, is that 10% enough really? Like, what if Chemist Warehouse could go and like then do a deal with API or whatever and get 10% of that as well,
Yeah.
Just go every 5 years you get 10% of one of your suppliers. Sounds pretty good.
I actually haven't looked for a while, but I did look quite in detail at Sigma a few years ago. I made an investment in API at the time. Anyway, they had this whole business case, but Sigma's really mediocre, man. Like they have really failed to deliver for shareholders. There's really no growth to speak of. In fact, they're earning less now than they were 10 years ago. Return on equity consistently below sort of 10%. Share price has gone nowhere in God knows how long. It's not covered itself in glory.
Yeah. So to my mind, the plays in this sector that are like the higher quality ones were always EBOS and API. Now, EBOS I liked better than API, but
API's gone now.
One of the things that they both had to their favor, which was that API owned Priceline. So it's a pharmaceutical distributor, but it also owns a huge pharmaceutical brand. So it's got like that customer it can rely on. Similar with EBOS building out the Terry White ChemMart, it has a large network of pharmacies that are going to stay with it and not like, do a terrible, like it's not bargaining to get the lowest price. And yeah, Chemist Warehouse had been with Sigma and then they separated and now they've come back, but Chemist Warehouse is sort of actually becoming Sigma. So maybe Chemist Warehouse takes over Sigma for all we know.
The other part of the thesis at the time too, and this is really a good, I don't know, I've thought about this a lot, where at the time, Sigma and API, two dominant gorillas sort of in that space, and API had spent a bunch on investments for their warehousing and their technology and the rest of it, and Sigma hadn't. And so obviously one's income statement and balance sheet looked a lot better than the others. But it just, I think we too often forget as investors, it's about what that money was sort of spent on and what that underpins for the future. And I think it's safe to say, with the benefit of a bit of hindsight, where Sigma really struggled with pretty inefficient systems and a huge CapEx program ahead of them. It's something you can't put this stuff off forever. That markets will often punish companies for making longer term decisions on CapEx. But, if you can sort of see through that, and particularly market tends to be pretty slow on picking this kind of stuff up. It's like, if you can find a company, it's like, well, actually you've gone through most of your CapEx program. There'll always be hiccups and delays and overruns and all of this kind of stuff. But that kind of gives you a lot of blue sky afterwards. And I don't know, it's something that's not, well, it wasn't obvious to me at the time, but I've thought a bit about.
Yeah, that's a good point.
I think LaserBond did the same kind of thing now that I think about it as well. It was just like when it was first pitched by Winnie, it was like, look, these guys have made some huge investments here that have yet to do anything other than just detract from the balance sheet. It's to date, because obviously the investment's all up front, but it's just something worth looking at.
Yeah, I think sometimes the only thing is, in a few years, do those need to be made again for some companies?
Yeah. Yes. Or is it a complete dumpster fire of an investment?
No, that's a good point. Yeah, there's a lot of tech stocks that pitch how much they've invested in the platform. And it's just like, you mean you've wasted a lot of money like before that net revenue,
It's got to be invested well.
Obviously, yeah, very different there.
But so I just wanted to add, look, I did listen to the conference call and you can, look, they gave the information in the announcement that now the pro forma net debt to EBITDA is 2 times, whereas previously at June it had been 1.76 times. So there's sort of some hint at the vague quantum of annual EBITDA that the company was like is going to that EBOS is going to lose from Chemist Warehouse. So it wasn't exactly clear, and they didn't disclose it, and they only talked in vagaries based on the analyst call. There was some analyst that was asking, is it 60 or is it 100 million a bit? I think it might be sort of 70-ish or somewhere between those numbers, closer to maybe 60, but 70, 80 million based on the sort of hints they gave. That means, it's a bit of a hit to the company because probably a bit in the order of 12 to 15%. I think if we look at the trailing 12 months, EBITDA was 458 million. This is New Zealand dollars. So if we called it 70 million, what that leads us with around 58, what is it, like 15%? So yeah, that kind of matches the amount the share price has come down if you assume that this information started coming out a little bit before the announcement. And so I'd say that generally speaking, probably the market's mostly just reflected this loss as a sort of one-time thing at the moment. I don't know where the share price will go in the coming days.
I'm just rereading it. I mean, it's just stunning, the deal. So Sigma is they're handing over 10% of their company. They're paying potentially 24 million of cash for the privilege of serving Chemist Warehouse and making, it says that will support Sigma's medium-term EBIT margin guidance of 1.5 to 2.5%. So for the privilege of making 1.5 to 2.5% profit margin.
Wow.
They're giving over 10% of the company and
pre-tax, pre-interest margin.
Yeah.
And the other thing, guys, is it's hugely capital intensive as well. So on the call with EBOS management, they were saying how they expect this to release at least 100 million in working capital. And then the analyst was like, so you're going to use that to pay down debt. And they were like, oh, well, probably not actually. There's a fair few opportunities. So they're probably going to take the $100 million that they get from, winding down this contract with Chemist Warehouse and try and look to make some acquisitions or whatever, because, essentially they themselves, the core of their business, like distributing a whole manner of different products, including, prosthetics and all kinds of hospital consumables, drugs to hospitals, to pharmacy networks, et cetera, et cetera. Yes, this is a big hit, and we're talking maybe 15% reduction in EBITDA, like probably their biggest single client. But the sort of sector itself, they've got pet healthcare and stuff, the overall, they sort of remain in a growth mindset. And the thing about this kind of growth for these distributing companies is it is capital intensive. So that's probably another factor. And probably my bigger concern for EBOS Group in this kind of environment is just you use a lot of debt to grow and fund your businesses. You have interest costs as a major interest, and interest rates are sort of high and trending higher. That would be my concern to the more medium term.
That's wild.
Idea, whereas this big hit, it's just it is what it is. It's a new risk that we knew could happen, and it shows that. I think that the lesson here is, Chemist Warehouse, if you're in any kind of adversarial relationship with them, like, watch out. Like, I wouldn't be feeling too comfortable if I'm Sigma either, like what's going to happen in 5 years.
Imagine that any other thing in life where you the customer and you demand 10%. Like, Andrew, have you ever been offered 10% ownership in any place you rented, for instance, just for the privilege?
I have to think about that.
And the cash payment?
Yeah, hard no.
Local coffee shop. I'll continue to buy my coffees here, but I want 10%. Yeah, it's pretty wild.
I want 10% of your entire business.
Yeah, it's pretty
it's
wild,
like
man.
Some loss-making coffee shop guys like, yep, you can have it.
True. You own this debt now. Yeah, that's true.
Speaking of interest rates, I just saw
breaking news.
Breaking news. We're recording this, as Claude said, on Tuesday. They just lifted 25 basis points.
There you go. What are we at? So it's
4.1, I want to say. So it must be. Yeah.
Please let that scare off buyers for houses in my area in Canberra. Stop bidding against me, builders.
Dude, you do know by now that nothing will kill it, no matter what, right? So just, you've got to take it from me. Just let it go. It's just going to keep mooning forever.
I know, mate. I'm trying to get back on the
chase the dragon.
Yeah. I'm effectively short property right now. Like, this is awful. Raise the rates.
All right, let's go to much more in the small cap land. I think you chatted to them recently, Andrew. Volpara. What were your thoughts? What were the latest?
So we spoke to Terry Thomas. She's really great, actually. She's really candid. There wasn't really much new in terms of insights on the business, but they seem to be just getting it done. I'm
guessing they mention AI a lot. Surely.
So I said to her that, you guys, because we spoke to them a year ago as well, and they were doing the AI thing before it was cool. So I'll cut them a bit of slack there, but because they are, right? They just have been for a while, but it's sort of
Sorry, this is breast density imaging, and they're running AI to help detect tumors, basically, right?
Yeah. Well, it's like a lot of this AI stuff. So they've always been doing the imaging and putting scores around that, and it's all to do with risk factors, and we're just basically trying to detect early this horrible, heinous kind of disease. But it's just the perfect substrate for AI to dig its teeth into, right? It's just lots and lots of data. I mean, that to my mind is one of their core assets, is the proprietary data sets that they sort of have. So they're doing a collaboration with, I think, Microsoft and others, where you think about the people doing work on this. Like, I need someone who's got lots of training data for me, please. And they've got amongst the biggest, right? So that's really cool. So yes, we definitely talked about AI. The other thing, I know I'm saying this a lot lately, but it's interesting because we've been speaking to so many companies for so long, how everyone in the growth sort of space, the narrative is 100% switching. They've all found religion, basically, right? And the
religion is
let's stop burning cash. And so that's, a lot of talk about sort of quarters of positive cash flow and what the footing that they think they'll be on. But also, I think it's worth going beyond that and making the point that, well, if you're getting a good return, spend, right? Like, it's my sort of favorite hobby horse at the moment, but I think it's something that gets missed too much. And her view was that, look, there's plenty of growth opportunity that's sort of out there that remains. You're seeing all the kind of things that you like with these kinds of businesses: a higher retention, not only increasing number of customers, and she's brought on some bigger name customers, but the customers are all using it more and more and more. And there's a lot of other geographies where they have, it's mainly a US kind of company, really. It's where most of the revenues are. And obviously this is a technology which is applicable anywhere. And there's a lot of even sort of first world kind of countries that don't have the penetration. And my observation tends to be in this space is that it's very hard to get traction. But when you do get a bit of momentum there, it tends to be, not in all cases, but it tends to be something to point to. Investing is largely a game of extrapolation. So you've got to extrapolate something, I suppose, but it becomes much easier to knock on the door and speak to a hospital administrator and say, oh, we're here, and we serve this many clients and we're the biggest. It's the sales get easier and easier and easier, and the cost to serve those customers gets lower and lower and lower as the business kind of scales. So it's eye-wateringly expensive on any traditional sort of metric, but there's very solid momentum there. I don't own shares, by the way, so I'm not trying to pump this, but yeah, it was a good chat.
Yeah, nice.
Do you guys own shares?
No, I don't own shares in Volpara, but I do think it's interesting. It's one that I watch. I've got, fairly minimal numbers of holdings of pre-profit securities in my share portfolio now, just because it's been, so tough for that sector. But as I guess, look, they say in America, it's like a bull market now. If the bull market really is going to be a bull market for a while, then eventually the money does flow down to small caps, in my experience. But until we kind of see that, I'm fairly wary of companies that haven't yet reached at least sort of break even. And Volpara is definitely like heading in the right direction. Like the Q4 had a much better cash flow result, for example, although that may have just been, that was a little bit of I think, lucky timing. But yeah, still, even so, they're heading in the right direction. And as a result, I think that makes them really interesting. And I wouldn't be surprised if in the long term, the people that hold through this sort of difficult period will be rewarded, because it's like buying an old house, but the old house has good bones, but it's not like looking great. These guys have revenue in 2023 of 35 million New Zealand dollars, and they had a gross profit of 32.4, essentially. So it's very high gross profit margins. Now they have a ton of expenses underneath that line, which they've been cutting back on. And I think that there kind of was obvious signs of bloat to me with this one, because I remember speaking to the old CEO, Ralph, like years ago in Hidden Gems days. And the impression I got from him was that at that time was that expenses would not increase anywhere nearly as quickly as they did. And I just think that they were like building a great team and focused on the revenue growth. And in a subsequent call with him, I remember getting the impression that he was like, look, the brokers say just grow the revenue, you can just raise more capital when you need to. And
brokers would definitely say that.
Yeah, I was like on the phone to him being like, dude, don't listen to the brokers, man. They want you to raise more capital. They don't care if it's at $1.50 or $1, or $1.05 or 60 cents. Mm-hmm. Like, they just don't care. As long as you need capital, that's a win for them.
Brokers just make a commission.
Don't ask the barber if you need a haircut.
Anyway, just in the nick of time, it would appear that the actual Volpara share price fell enough for I guess, the board to sort of like doubt that they was a good idea to just keep trying to raise capital. And so that's when they've, changed CEO. They brought in Terry Thomas, who's been interviewed on Strawman, which I'm looking forward to watching that, Andrew. And she's done, she's taken it in a bit of a different direction and been a bit harsh with the cost cutting. And I think it needed to be done, basically. And if they can maintain revenue growth from here, then I think it gets very interesting.
So I should mention as well, Craig Hadfield, the CFO, was on the call as well. So
and really he's a long-serving CFO. Like I reckon there's a pretty solid bone. There's good bones to this company.
Yeah, he seemed like a straight shooter. I mean, it's always so hard to tell, right? But there's a couple of points there. He said, I'm going to disagree with Terry, but which is really what you want. You want sort of someone who's going to work with you, but also challenge you when needed. Maybe I'm reading too much into one small interaction, but he did make the point. Like, I forget the exact question that came up, but he felt, I think I was asking about the cost base and saying, is there a cost to reducing costs? And he's indicated that they felt confident of sort of, I think, circa 20% sort of revenue growth for the foreseeable future and much, much lower cost growth. Now, that's what they're going to say, right? So you take it for what it's worth. But like so many, they've really got the message from the market. And so it'll be interesting. It'll be interesting to see as we emerge from this period, those companies that manage to pivot to a more viable proposition and maintain the pace of revenue growth. I think there'll be a few standouts amongst that can finally do that. I think they'll be the ones that are more, I won't say come back because that implies things getting back to what we might look at now as in pretty unrealistic valuations, but certainly help them hold up better than those that just, turns out that there's nothing here once you take away the free money.
Yeah, I think for Volpara, it's very interesting because it's like, well, we don't really know exactly what their cash losses are going to be going forward because they've had a strong improvement over the last financial year. But that doesn't really change the fact that there's like 9.7 million cash in the bank, plus I think they've got some cash on deposit, so bring it up to 12 or something like that, or 13. Like, it's kind of going to run close based on their old cash burn because just at the beginning of FY 2023, they were burning through more than 3 million a quarter. But, like I said, the improvement under the new CEO has been drastic and it's looking much closer to break even now. So maybe they've just got it on the right glide path financially. And I think that's why it's interesting.
Agreed.
Yep. One to watch, I think. Gents, did you have anything else? Otherwise, maybe we'll wrap it there.
No, only other than...
You want to talk about Bitcoin again?
No. But yes.
Bitcoin's the new drinking game for this.
Yeah, that's true. Sorry.
I had
someone not our fault, it's Andrew's fault.
Who rang me up out of the blue just before he came on, actually. It was just like, I heard a podcast, you mentioned that. And we had a very big Bitcoin conversation. Anyway, so it's fun. It's funny when you find someone else who's like, you actually don't want me to shut up? That's cool. I was going to say to the listeners, it's always helpful to get suggestions. So... yeah, throw some our way and gives us something to sort of riff on. But it's always better too than if you can sort of add some of your own thoughts, because a lot of the time there's so many companies out there.
Because you guys are smarter than us.
Yeah, so let us know. Is there something that's interesting? That's great, but why is it interesting? And that's even
just
that's
talking
even more
for
helpful.
me and Andrew there, obviously.
I think that's a great idea. Yeah, hit us up on Twitter at BabyGiantsPod. See anything you found, why you like it, something like that. Yeah, you can definitely riff on it. Cool. Until next time, thanks very much for listening.
Thanks for listening, everyone.